and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound.
Morning, I'm just setting
of
stuff
the
up.
trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.
Okay, good. Why? Should get ads on. Put out a post for a podcast. Podcast is down on. Do not get FOMO. Don't think it is some groundbreaking idea, but I'm looking at my buddy's pictures from Alaska. His son is stationed up there, the Air Force, and they went up to visit him. Incredible pic. Market is ugly again. Some scans. Market scanner. Last day for Trendspider sale. So if you're not subscribed to Trendspider, it's the last day for the sale. I can't overstate the comfort level I get from having this. Funny because I mean, Amazon covered that gap up to 182, kind of pulled back, right in the middle of that gap now, just trading sideways. Bollinger Bands have cinched up. It's trading on top of the 9-day. You would think we're going up, but I can't imagine this one continues up. I don't know. And Pepsi was up yesterday. And you know what else was up yesterday? Was UNH. Look at that. I mean, that morning candle of 3% up. I don't even know what happened. But UNH went bonkers. It's almost at 600. UNH morning. I think D-Man said he was positive for the day yesterday in his morning degenerates. Pepsi. Probably, nope. BOO will get you out today in the hour. Bitcoin, which is under 60,000. Let's covered call ETFs. I don't think covered call ETFs. If you can catch them where they're paying a dividend, probably not horrible. Energy, Boyle, and Energy Transfer. Boyle's up 2%. TSLL. FL, Q or N and Q. Morning, Shady Proof. Family. Only place I've ever been that was family entertainment was the go-karts. Wow, we've got 2 spider sectors that look bullish. XLU and XLRE. We went over XLU kind of on a weekly, and you can see, even then, I said, even though you're seeing weakness on this one in June, I said, it's got to come back from 6. I mean, that's a great. With lowering rates, utilities, I mean, that's just common sense. And XLRE going for more of a run, both of them. Watch list. GCT. It was up a little yesterday. On that report that they're buying back, morning candle was up 5%. Afternoon candle down 0.1. It's up another. I sold it about 22. I would think about getting back in. I mean, I'm not adverse to that one. It's not a bad. Again, if they're buying back stock, I think. Problem is, it's just market cap. I don't expect it to explode again. Small company. Is it under 100? I think it gets there. Not already. It's 105. Honestly, Mark, I think it gets there, and I have it in my notes. If it gets there, I'm gonna just buy it. Dow, Amazon, one in the Dow that crossed up. I also have kind of just a story about Seeking Alpha ran it. What's going to replace Intel in the Dow? Because to be honest, Intel doesn't belong in the top 30 companies. Pepsi, PCAR, Dexcom, cross up, Mondelez, cross up. Southern Company, Pepsi, Abbott, Deere, Amazon, Deere. Coming back after its earnings, gapped up on the earnings, continued to show strength here. Got a gap at 408. Kind of the note back here, I like it to get back to the 2. This is a continued 4-hour. Okay, I noticed yesterday that the screen was off. So my apologies about the recording if anybody watched the recording. The screen was off. It's fixed now. I'd like you to see the results in Trendspider, but I think that's a good enough look at it. Deere & Company, the algorithm makes you 16% versus 1.5%. Okay. MPLX is down 1.2. It's just oil. Oil's getting killed. Here's the thing. Oil getting killed, good for the economy because we're not going into recession. As long as energy's cheap, you should not have a recession. But you never know. You just never know. It's funny, in my headphones, I don't hear the clipping of the audio, but I think on the recording I do. And I don't know what that is. Supposedly recording the thing. Okay. This I found interesting because Apple, they make it well known Apple wouldn't allow that. We'll look at iBit MicroStrategy as Bank of America, Wells Fargo, JP Morgan, Goldman Sachs, Schwab, Citi, and Morgan Stanley all buys. UNH was up. My take on NVIDIA. Gene Munster put it perfectly yesterday. Sorry. NVIDIA stock is selling off. It's not because of Blackwell. This is from Beth Kindig that did the Instagram. This is a great interview Josh Brown did yesterday with Ann Ives. I'll put the huge amount of big tech's capex directly to. This is an interesting one. Would you buy this chart? Look at that. Stock could replace Intel. This was a good story on QQQM. They do a good job of comparing it to VUG, which is Vanguard's growth. Biggest stock movers today, NVIDIA, of course, the scaler. This was Tom Lee saying 7 to 10% pullback yesterday. There's my notes. Posted in the letter, this one. And Unjin. Americans are really bullish stocks. Really bullish. And we'll posted a few charts on Twitter yesterday about gold. Alpha Pick was out. And just some general life advice. Anybody 20s, 30s. So I thought Casey put it really well here. Okay, let's go back to views. In the strategy, it's gotten you out with a nice 4% gain. VOO still has you in. I would get out. I think you're going below 400 or 500. Right there. Let's see. Live, my buddy. Do Are they cutting? You know, let me, if it's cutting out, let me do this. For some reason, but you know what? Let me trash the noise gate. Yes, the compressor should be fine. Are my words cutting out now? On the it's funny because here live, I'm not hearing it. Let me see. You know what? Let me trash the noise gate. Yes, the compressor should be fine. Are my words cutting out now? There we go. It's funny because I think the compressor's okay. I think the noise gate was cutting everything out. I think we're okay now. I'm going to leave the compressor in there. I'm going to leave the compressor in there just to see how it works. But if if the words are cutting out, I think it was the noise gate. I think the compressor's okay. I think the noise gate was cutting everything out. Yeah, I think it's the I think we're okay now. I'm going to leave the compressor in there. Sounds like it's okay now. I'm going to leave the compressor in there just to see how it works. But if if the words are cutting out, I think it was the noise. Thanks, Scott, for having my back. I think the compressor's okay. I think the noise. And now you're going to hear some echo and reverb and for the next couple of seconds. But if my voice is okay, then I'm going to hit the recording. It looks ugly here. Let me see what the futures are at. Dick's Sporting Goods blows past earnings, estimates, but issues guidance. Let me just make sure. Let me see if there's something on here that... Oh, this is kind of interesting. Yeah, I think I'll include this. I think that's good enough. Nine reasons stocks tanked. Put that there. That's right after newsletter. Okay, so we're going to open that up and move this right there. Yep. Okay. I like that one. I don't know whether to bring this up. For advanced marketing, wafer at high volume, the report added, citing people with knowledge of wafer pricing. Start high manufacturing later this month. Gilsinger said, and some other are expected to table a plan to board to cut unnecessary businesses and curtail. I don't know if that's, I mean, it's got Broadcom in it. I'm invested in Broadcom. I don't think it's, probably not. I mean, there's the futures. Silver, you can see, is up. Genius Sports denies allegations. We can see they're getting hit on denying the allegations. Yeah. Okay. I think I've got enough to kind of go on it. Dude, let's go back here. Okay. I'm going to be right back.
Every morning I wake up to the sound
I'm going to leave you
of the
with a countdown.
trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow.
Okay, I'm back. What's up or down, Andres? Oh. Tune in daily. Don't miss a single show. Sign up for the newsletter. Let us help you grow. Daily Stock Pick podcast in my ears, guiding me through hopes and fears. Okay. I'm going to hit the record button. If you're new here, consider subscribing. This is where I record the podcast. I hit record. I ignore your comments for a little while, and then I come back on, and I'll read your comments and do whatever needs to be done from looking at stuff. So I'm going to hit the record button now. Larry, before I do. Larry. Okay. Good morning. It is Wednesday. It's Hump Day, September 4th. Bloody Tuesday? Is it Tuesday, Bloody Tuesday that you two sang about? Because yesterday was bad. Just to get things out of the way, I did get a complaint yesterday about ads on the podcast yesterday. I think it's every 10 minutes. It's not every 2 minutes. I have Spotify Premium, so I do get ads, but I'm able to skip through them. Hopefully you're able to skip through them as well. Just understand, sorry if it's annoying, but the ads provide me groceries every month. Your boy needs tomatoes. Your boy needs to eat. So again, I thank everybody for the support. I got to eat. So every 10 minutes, there's a couple of ads on Spotify. I think it plays other places too. But if you want to know how much it provides me, there's a video on YouTube that you can see how much I made through August. So I cringe every time I even talk about it. But I wanted to start out with this. Some of you guys, my audience is usually in their 20s to 30s. I think Casey Neistat put it very well. And yesterday, again, when I talk about things, I want you to make sure that you are long-term invested. So the majority of your money should be long-term invested. If you're listening to this and you've got debt, pay off your debt. If you're listening to this and you want to get rich, I'm not the guy. I'm going to be the long-term, get rich quick. No, I'm not going to do options. I'm not going to do that. But age-wise, spend your 20s figuring stuff out. You've got tons of time. You've got the ability to, adhere risk. So if you're down from yesterday, don't worry. If you're in your 20s, you've got plenty of time. A 3% correction yesterday is nothing. Spend your 30s actually making sure that your strategy works, making sure that you've got things figured out, and then spend your 40s enjoying it. I think that's perfect life advice. And I wanted to bring that one to you. I just thought that was good. Now, we had a new alpha pick yesterday. It was released, soaring 50% in the last year on underwriting and management and strong products and sales. The company returned $400 million to shareholders in Q2 2024. Find out what it is. Alpha Picks is a curated portfolio that you're able to get. Again, the return on Alpha Picks 114% versus 38%. In the S&P, it's 2 data picks a month. One on the 1st. We got one yesterday because it was the 3rd. You had Labor Day. So you got one yesterday. You'll get one on the 15th. Alerts when to sell. That's why it's a good managed portfolio, is because they alert you when to sell. They don't do it for you. So you get to make these decisions. The stock picks are over multiple sectors. A lot of stocks like yesterday's I knew nothing about. Nothing. A stock I normally wouldn't pick, and I use it as tips. You don't need to hit the buy button. You don't need to buy it. They don't even need to hit it out of the park every time. A good look at there's 2 of them that they've picked this year, Berkshire Hathaway and Sprouts Farmers Market. Those are 2 that have been up. Berkshire, all-time highs. Sprouts Farmers Market, all-time highs. They are recent winners. So if you're interested, you go over to Linktree. The link is down below, linktr.ee/dailystockpick. It's the 3rd link, Alpha Picks. So if you're listening to this podcast and you're just like, hey, I want some my portfolio to gain over time, that's the best advice I can give you, is this is a proven portfolio. So let's talk about yesterday a little bit. And let's talk about kind of long-term, okay? I posted these 2 charts on Twitter yesterday. Now, what is this? Well, GLD, which is the iShares gold. So it tracks gold. It's just like iBit tracks Bitcoin, tracks gold, QQQ, and VOO. Okay, this is a year-to-date chart. Year-to-date. Okay, GLD is up 19%. QQQ is up 15%. VOO is up 17%. Gold is beating. And you may say, well, yeah, you know what? Valuation is crazy. People are fleeing towards safety. You haven't been good unless you've been in NVIDIA. If you've been in the Mag 7, you're doing better than this year for the most part. Now, over 3 years, gold is up 34%. QQQ is up 23%. And VOO is up 23% as well. It's just interesting. What's this telling us? Well, I think it's telling us that a large amount of people are betting that gold is a better trade. So I don't know for sure. Nobody knows for sure. But I thought that was interesting. GLD, again, outperforming on 3 year. When you go to 5 year or 10 year, it's not outperforming anywhere close. So long term, gold isn't performing as well. But short term, it does seem to be performing better. So GLD might be interesting, to look into that. Now, Gunjan from Wall Street Journal, Americans are really, really, really bullish on stocks. And I've got two things from her. The first is this post that she posted on Twitter yesterday. And she said, hey, in August, money poured in when they bought the dip. Is it going to happen in September again? I believe it will, but I don't believe it's a one-day scenario right now. I think you want to be patient. I think you want to make sure that you take a look at the charts. We can take a look at QQQ, okay? The algorithm got you out yesterday. Now, the algorithm isn't, and it's 4 hours, so it's 2 candles per day. It is nothing that is going to absolutely protect you from all the downside, but it plays in a middle ground. So it's a very good strategy to play in the middle ground. And if you want to create your own strategy, Trendspider has those too. I put in yesterday a newsletter on dailystockpick.substack.com. I put a newsletter out that what makes a good strategy. Now, don't get FOMO. There is nothing genius about this podcast. It is for paid subscribers, but there is nothing genius about it. It's something like 20 minutes. I decided to do it yesterday because I was on Spaces. I was asked what's a good strategy for stocks. I decided to record a video about it. I thought it was good. And part of that is, hey, Trendspider has all of these free strategies. And I posted it in the newsletter yesterday. And I'll try and post it again today. So if you're a Trendspider subscriber, you can literally go to this Trendspider tool store and download all of these strategies, all of these scanners, all of these indicators. You can download them yourself, import them into your system. And remember, Trendspider is having a sale, a Labor Day sale. It's going on for another 16 hours. Don't miss it. If you want it, on the top here, it's the top link. So you get to import all those strategies. On top of it, I will email you my 4 hour. I will email you my 65-minute. I will email you my 5-minute one. I will email you all the watch lists. It's basically click and play. It is a good tool to actually get you started on Trendspider with these strategies. It gives you plug and play to get started on day one. You don't have to understand what the MACD is. You just have to understand, hey, I clicked this and the back-tested results are this. And you can use it. It's really, really good. I'm telling you, there are strategies that work in here. And so when I typed this out yesterday, I was like, hey, Trendspider is a great tool. Go and get it. And if you want more strategies, then there's a special in the welcome letter about signing up for the newsletter. So again, get those. It's Labor Day. It's limited time. But Gunjan is saying, hey, buy the dip. And then she went on CNBC and said about it. Euphoria about stocks. I think there is a buy the dip mentality, but I don't think it's happening right now. Here's my opinion on QQQ. Understand that anybody that tells you their opinion, it's an opinion. Nobody knows what's going to happen. Everybody's making educated guesses. That's all this market is. If somebody absolutely knew, it's called insider trading, first off. Second off, they wouldn't be doing a podcast. They wouldn't be doing a lot of this stuff. So, we're all just making educated guesses here. And that's the number one thing that you can take away from this podcast is anything that anybody tells you, it's an educated guess. They can say absolutely, and it could turn out to be true, but it's an educated guess. Here are the cues. Now, where are we going? My guess, we're going to use that 450. We're at 461 right now. It looks like the 200-day is using support. The 50-day has started to turn positive, but we're under that right now. Now, the MACD, kind of right on the oscillator, not telling us anything. It is moving down. The RSI is at 39. We're quickly becoming oversold. But on the Qs, when you go to weekly, the MACD is still high, still has room to go down. The RSI is at 58. It's not in oversold territory yet, still high. The candle from yesterday, the weekly candle with a period of 2.4%, negative 2.4%, doesn't even register on this. You're still in an upward trend. Timing matters. Your time frame matters. Now, on VOO, which is the stock I like to look at, not SPY. If you're trading options or you're doing anything like that, I think SPY is great. But because VOO has a lower expense rate, you wind up making more money over a certain amount of time. But here we are on the 4-hour. It hasn't gotten you out. Again, the 4-hour plays in this middle ground. And why do I listen to the 4-hour on VOO and QQQ? Because the performance of trading in and out of these over 24 months beats buy and hold. So it's something, am I getting out of all of my QQQ or VOO? No. I'm simply looking at these algorithms to tell me, are we weak? Should I trim? The last 3 or 4 times I tried to time the algorithm, I wound up, missing out on the August run. I tried to time the algorithm down here, and I said, you know what? On August 8th, I'm going to sell a little bit. I'm going to trim a little bit. It was wrong because I missed out on this whole run. Now, what you're seeing is a nice little double top here. I mean, we can talk about it. Double top on VOO. The MACD still high. The RSI still high. When you go to a weekly on VOO, MACD still high. RSI still high. We're still over the 9-day. We still have room to go down. Where do I think you're going on VOO? I think you're going under 500. I think you're going to touch under 500. You're going to fill this gap down here to 501. And I think that's where you're going. Now, in pre-market, you're a 506. So it's not a huge move down. But I would argue, again, we talked about Bob yesterday, time in the market beats timing the market. And that's the main thing. But time in the market beats, timing the market. 9 reasons the stock market tanked yesterday. This is a good list. Good list. I may sit down here and say I told you so, but about patience. Where does it go from here? I don't know. This is seasonality at its best. August ended up. We talked about the seasonality. We can talk about, the seasonality of August. It was 57%. We wound up positive. September is only 36% over the last 14 years. If we go to QQQ, remember, this is at 459. I think we're coming down to 450. You can take a look at the seasonality of the last 26 years. August up 58% of the time. September up only 42% of the time. The mean change is down 2.4%. I think this is a buying opportunity. Do you want to load in all at once? No, you want to take this day by day. I think we are continuing to see downside. I'm not getting out, but I think if you're worried about the downside on some of your portfolio, trim it. Trim it. The VIX went back over 20. We can talk about the VIX. It went back over 20. I said this before. I think the VIX wants to be at 20. It's at 22 right now. We're seeing increased volatility. Are we going back up to 60? I don't think so. The 10-year split, we can look at the market data and we can go to bonds here. And you can look at the 2-year is at 3.87. The 10-year is at 3.83. They're almost undone from inversion. That's good news. That's good news. Oil is crashing. It's crashing down. That means inflation should come down because oil and energy is one of the main components of inflation. OPEC is reducing capacity because the U.S. is producing more than we ever have been, and China is still weak. That's it. Tom Lee was on CNBC yesterday. He said this, the quote, I think a 7 to 10% pullback can happen over the next 8 weeks, but it would be a situation to buy the dip. It's a strong market. Don't think we've seen the tops for 2024. Understand, this guy also said IWM would be up would be up 15% in August. It wasn't. He's making just the best guess he can. I don't think he's trying to mislead people. I think he's trying to be a little bit, kind of shocking in order to get on TV. But I do think he's been right on a couple of things. And again, it's just a good guess. So, biggest stock movers of the day. GitLabs, we talked about it yesterday. Huge earnings. They're up 15%. NVIDIA shares continue to decelerate. The DOJ is saying that, hey, we're going to investigate them for, anti-competitive behavior. And Zscaler, which I thought was going to be good, it plunged 15%. Strong results. The drop came after the cybersecurity firm's outlook for full year 2025 fell short of analyst estimates. We've talked about it before. This market is priced for perfection. And that's the problem, is when you beat, if you guide a little lower than they're expecting, your stock's going to get killed. And so Zscaler got killed. Nothing really to worry about. We talked about the Qs. QQQM, I do own some of this. The reason is because it has lower fees. QQQM and QQQ are exactly the same. QQQM has a 0.15 compared to QQQ's 0.2 expense ratio. So it costs you less. That's it. My buy and holds, I've been using more QQQM. I don't want to sell the Qs and buy QQQM because it just hasn't been proven out. But again, it does beat long term. So I liked it. This particular article, they look at the holdings, they look at the sectors, and they go over the differences between this one and VUG, which is Vanguard Growth Index Fund. I thought this article was good. I thought this article is interesting. I think it's a good time maybe to get into QQQ at some point in time. Not right now. Again, the algorithm just got you out. We're seeing weakness. We're down to almost 0.5% today. I don't see a rebound in this one right now. I think we continue to go lower. We talked about the 3-8% downturns that we saw last year in this time. So I think you see some chop, but you want to have QQQ or QQQM in your long term, or even VUG. Now, what stock will replace Intel? Because Intel will be ousted from the Dow at some point in time. The most likely scenario is that it's NVIDIA. And that's the thing. NVIDIA, probably. Now, here's the NVIDIA chart. Would you trade this? MACD's crossing up. You're just got your 50-day. You just crossed your 50-day. FYI, this is a reverse chart of NVIDIA. So the MACD on the daily is crossing down, and we're just under the 50-day. So that's an inverse. Okay, so when you go over to NVIDIA and you look at this on the 4-hour, the 4-hour got you out here with an 11% gain. It got you out yesterday, August 30th. It looks weak. It still looks weak. So it got you out right after earnings. We didn't see confirmation after earnings. You didn't get above that 9-day. When we look at the daily, you can see the MACD is just starting to cross down. It's already crossed down on the 4-hour. And we don't have confirmation. We're below. Again, that was an inverse. So if you're thinking, oh my God, that looked great, I want to get into NVIDIA, look at how weak it looks. And when you go to a weekly chart, we still have room to go down. But again, I don't think this move down is even going to register. It's just been flying. The valuation makes sense. But the problem is, NVIDIA was killed yesterday. Nothing to see here. A huge amount of CapEx. I'll include a chart from Yahoo Finance in the newsletter. But it was an antitrust investigation. Maybe had leaked earlier in the day, and that was why it was down 10%. So maybe the reaction today, only being down 1%, isn't as bad as it would be had that investigation not leaked. They have 90% of the GPU market share. So that investigation completely expected. A huge amount of big tech's CapEx is going directly to NVIDIA. And I'll show you this. 40% of Microsoft's, 40% of Meta, 40% of, I don't know what that is, Alphabet, Amazon, Tesla, Alphabet, and Amazon. So all of these big hyperscalers are just buying. Elon announced yesterday the largest learning model for XAI, all NVIDIA chips, and they're still looking to grow it. And I thought Gene Munster yesterday, this one with Dan Ives and Josh Brown. And sorry, Josh Brown, about the look there, but I had to pause it there. But this is a great one. You know, they talk about the AI opportunity and how Dan Ives, decked out in his normal, Dan Ives attire, is out there. I liked, he's out there saying, hey, you know, the valuation makes sense. It's not like the 2000s. And here's Beth Kindig from yesterday, who said that the market cap of NVIDIA is going to be $10 trillion. She just wrote a great piece about NVIDIA and Blackwell. She was the one that got it right. She said she was the only one in her assessment. While Wall Street was saying that Blackwell would be delayed, she said, no, it's not delayed. She said, and in this article, I can point this out to you. She said she's buying the dip. Does that mean you buy the dip? No. Let me put it to you this way. Gene Munster. Well, that would talk about bad timing. He was on CNBC yesterday morning. I made the case that tech would continue to move higher in September. The NASDAQ traded down 3.3%. This was only one of 8 times the NASDAQ has traded down more than 3% in the last 500 trading days. Shame on me for trying to predict what the market will do in the near term. That said, the fundamentals of AI are most important to what the market does over the next 3 to 5 years. Timing matters. So, do I think you should go out and load into NVIDIA? No. Do I think you should add to your position? In my mind, my take, anything under $100, I think you add to it. You don't load up the Brinks truck. You don't. Because the market cap can come back and bite this one in the ass. That's just it. You don't want to go out and go all in on this one. Have a diversified portfolio. You know, and again, I would point out the Qs and XLK's holdings. If you look at XLK, say you want NVIDIA, but you don't want to buy the single stock. Okay? XLK, 20% of this is NVIDIA. 21% is Microsoft. So 41% are 2 stocks of XLK. It got destroyed yesterday, 4.5%. It was down almost as much as NVIDIA, but it wasn't down as much as Microsoft. You know, NVIDIA just got killed yesterday. So my take again, when you look at this and you look at NVIDIA, let's go to NVIDIA, and we look at Wall Street. Wall Street's not bringing the price target down. Price target is 148. If we go to FinViz and we look at NVIDIA, because most of you may not have Seeking Alpha and be able to look at that, again, target price is 149. Look at the latest. Goldman. Oh, stop. Get out of here. That's an ad, and I can't get rid of it. There we go. Goldman, or Needham, buy. They upped their price target on August 29th to 145. Goldman, on August 19th, buy, 135. Okay? The New Street didn't up their price target. But you look at July 15th, 140 to 165. These guys were all going up, and nobody's brought it down. So, again, I think you do you. I'm not telling you what to do. I just think that this one, the market reaction is an overreaction. I think people are selling. I think you're going to see higher highs in the long term. It's just a matter of trying to be patient. And again, what makes a good strategy? Find your strategy. Is it the 4-hour algorithm? Make sure that you have some sense of technicals. As well as the fundamentals. But I do think Gene Munster put it well. Talk about bad timing. There's bad timing all over the place. And you can talk about, people trying to time the market and stuff like that. Some people will get it right. Other people will get it wrong. Doesn't make them a genius. Now, UNH yesterday, it's up near 600. This one had a great day yesterday. This was up 1%. It's been on a tear. Again, since this 400, when I said buy it under 500, sell it over 500, I didn't know it was going on this run. But since their earnings, this one has seen a constant move up. And we can look at this. This is in the core portfolio. UNH, the average price target is 622 on the street. Okay, a lot of analysts cover this. Let's look how many. 26. That's a decent enough amount. So the valuation's crazy. The growth, not great. But It's the creme de la creme. You're paying for the top dollar. The PEG ratio going forward, 1.54. That's not nuts. The sector's at 2. It's ranked number 3 out of 10 in healthcare. What's number 1? Clove, CLOV. I mean, that one, look at that stock. It's had a nice little pullback. But again, UNH, good day. I think Bank of America, and I'm going to list these right here. Bank of America, Wells Fargo, JP Morgan, Goldman Sachs, Schwab, and Citi, and Morgan Stanley are all banks you can buy on the pullback. Bank of America is down 0.3%. Goldman Sachs has pulled back. Look at that pullback. Algorithm got you out with a loss. I would argue if you're buying Goldman Sachs at 491, it's a little bit crazy. I would wait for it to get back to its 200-day at 465. The other thing I would do is if you're looking to get into banks and you don't know banks, just buy XLF. Do you want to buy it now? No. I would argue you buy this on the 4-hour algorithm. The 4-hour algorithm over 2 years makes you 54% versus just making 31% over 2 years. Okay, it's not a lot. 24 months, you have 20 positions. So I would argue that XLF is the way to buy all of those banks. And Bitcoin is back under 60,000. Okay, IBIT. Let's take a look at IBIT. The algorithm got you out. I am looking to add to this one more. So when the algorithm tells me to buy, I'm going to buy. I'm going to buy back in. I'm going to wait for some strength to buy back in. I'm not buying on weakness. So I'm going to wait for some strength. MicroStrategy, which we talked about being a leveraged Bitcoin play, this one is down huge. This one's down 1.9%. But again, the buy was at 137. Should I have gotten out? Maybe. But I'm waiting for some strength to buy in. The algorithm makes you 637% in MicroStrategy. Okay? Over 24 months in 24 positions. Your average win is 41%. This one has a large part to do with it. When it said buy here at 46, and all of a sudden it was up 241%, and then back in May it said buy here and you're up 32%, that has a lot to do with it. Your win rate is 46%. It's close to 50. But your average loss is only 6.9%. Again, it tries to protect you from the downside. But I'm starting to play this just for a long-term Bitcoin strategy. So I like this. I like the play of Bitcoin. Again, I'm not loading into this. I'm waiting for further downside. I don't know what you want to do, but if you're out of the market, Bob will tell you, I should have gotten into the market on weakness, not bought at the all-time highs. That's what Bob tells you. Go back to yesterday, read that Bob story, because it's not today. This is during the 1970s. And the market in the 1970s is not like today, but it's very similar. Okay, they had rising rates. They had inflation. They had a lot of issues. They had oil embargoes. They had a lot of issues that are similar to today. It's not going to be one for one. But the point of Bob is, hey, if you just buy at the market highs, we have a higher high. So I found this interesting. Facebook ad partner may have tried to listen into your conversations. I found this interesting because they make note Apple devices would never let you listen. That's just the simple fact. There's a big screaming orange icon on your Apple device. I found it interesting. If for some reason you're scared of China listening to you, advertisers listening to you, Apple has limited that fact, and they make they tell you that Apple is the privacy phone. I would argue on the Google side, the only phone that is restricted from this type of stuff is probably the Pixel. Now, Samsung, you have to understand how the operating systems work. Apple has their entire operating system locked down, so you can't have an Apple iOS on another phone. It's got to be an Apple phone, so they lock it down. The way Android works is you've got this shell that's called Android, and that's the operating system. Then you've got these forks. And so the forks allow you to, the manufacturer of the phone to actually do certain things. Well, the manufacturer of some phones allow people to listen in. That's just it. I mean, it's an interesting thing. The iPhone 16, I'm going to upgrade. I don't know if you are, but I am going to upgrade. So I'm waiting for that next week. And Apple, again, I think I said this on Thursday or the paid newsletter over the weekend. At $230, it didn't make sense not to trim. In your retirement account, trim it. Just trim it. Sell a couple of shares. You know, if you have $50,000 worth of Apple, you know, does $5,000 make a huge difference to you? No, trim it. At $230, trim it. Because if it goes to $235 and it goes on a run, you can always add it back at a higher price. But let this be a lesson to you that when you're at all-time highs, start trimming. You don't have to get rid of the entire position. You don't have to do all or nothing. It's just about taking those baby steps. You don't climb Mount Everest in one day. There are 4 stops to Mount Everest. In fact, I think it's 5 to 7 stops to climb Kilimanjaro. It's not about getting up there and then selling out. It's about taking those baby steps and getting to the top. And by the time you're back down to the middle, maybe at that point you want to be out. You know, 0 to 100. Maybe at 50 you want to be out. But again, the point is that it's clear we're at all-time highs. The PE was just too high. It was too crazy. So I was on Spaces yesterday with Todd Gordon, who had just gotten off of CNBC, talking about Shark Ninja and how it was his newest large position. So I looked it up yesterday. I was like, you know, I just bought a Shark Ninja, a wireless vacuum, a battery-operated vacuum for the house. I love it. I love it. And the Shark, it's actually working really well. Spent half the price of a Dyson. This is an interesting one. The algorithm makes you 73%, but over 13.3 months, because it's an IPO, you've made 139%. And so I went in and I said, you know, let me look at this one real quick. The quant has it as a hold, and it's the valuation. And when you look at the valuation, the PE is 26. But the PEG going forward is 1.28. When you look at the growth, they're growing incredibly. Revenue, 21%. Leverage free cash flow, they're growing 58% when the sector is growing at 8%. Now, the profitability is where the issue is. Because the cash per share, they're just not making enough money because they're probably spending a ton of money. When you look at the ranking industry, it's Electrolux is the number 1. Cook is the number 2. This is the grill maker. But I thought this was an interesting play. I want to take a look at it a little bit more. But with that price, you know, again, the price is the 52-week range is between 33 and 96. Do I want to buy at 96? Well, average price target from Wall Street, 102. But when you take a look at it, they've chased it up. Now, when's their earnings coming up? Let's take a look at Shark Ninja. Their earnings just came about, and they gapped up here a couple of days after earnings from 85 to 86. It's an interesting one. Again, on the 4-hour, the MACD, kind of low. Looks like it's crossing up again. I'm going to put this on the watch list. And what does that do? That basically puts it on the watch list for everybody that's in my program in Trendspider. So if you go to the daily stock pick watch list, you'll now see Shark Ninja. What does that allow me to do? It allows me to scan for it. So when it has an entry in the 4-hour, I will get an alert as long as I set it up. But I can when I'm scanning for it, I will get that alert that, hey, it just had an entry into the 4-hour algorithm. So that's how easy it is to use Trendspider to get that alert. During this time, and I will remind you, I always say you should have 5 stocks that are on your hit list that if they pull back 5% or more, you want to buy them. No questions asked. Is Shark Ninja one of those? I don't know. Maybe it is. I've got the vacuum. I really like it. Now let's talk about earnings from Earnings Hub. Dick's Sporting Good, they reported this morning. We're going to look up Dick's Sporting Good. DKS is the symbol. They reported, this is kind of like the, hey, any news is good news kind of thing. Dick's Sporting Good, they reported, they beat and guided, but not high enough. And so their stock is getting killed. Year to date, this one is up 57%. 57%. DKS. We can go and look at DKS. It is down 2.85%. That's getting killed after beating by that much. Okay, MACD crossing down. The moving averages, 9 looks like it's just above the 21. Algorithm had you in at 207. You make 38% on the algorithm on this one. If you bought and held 2 years ago, you're up 112%. 112%. You have gaps all over the place. They've all been filled. If you look at Dick's in Seeking Alpha, and we go to Dick's Sporting Goods, you can see the average price target is $239. That's only 3% upgrade. Do I want to buy this one? Probably not. Again, it's at highs. Do I want to buy it? The valuation is a little bit stretched. They beat, but they got it a little lower. Wait for it to turn out a little bit. Dollar Tree, another good one. Dollar Tree, they reported bad quarter, and they got it down. This one's down 13%. We saw Dollar Store do the same thing just last week. So this isn't shocking. This gap down here is really from when the Dollar Store reported. This is Dollar Tree. And these guys just, again, the lower end consumer is tough. What's creeping back in? A recession fear. And so that's why I think you're going to see more downturn. I don't think a recession is coming. So I'm on the assumption that, hey, we're going to bounce back. It's going to go back up. But these earnings are telling you, hey, these weaker stores, they're having a problem. Who's taking their business? It might be Walmart. It very well might be Walmart. You can see this stock. If we go to a weekly on Walmart, it's bottom left to upper right. Okay? You go to Dollar Tree. Let's see. Dollar Tree. If we go to a weekly chart on Dollar Tree, that's not bottom left to upper right. That's during the post-pandemic. Ooh, we shot up. And then you're just seeing lower highs. So, strategy number one, go and take a look at a weekly or a monthly chart. If you're bottom left to upper right, you're probably in the good, even if you're looking at a 4-hour or a daily. Say you've got a 9-to-5 job. Do not look at 5-minute charts. If you've got a 9-to-5 chart, maybe look at a 4-hour, maybe look at a daily. If you're not looking at your portfolio on a daily basis, maybe go to a weekly chart to try and manage it that way. So have a strategy that works. Understand that your lifestyle and your strategy need to match. You can't be looking at 5-minute charts and have a full-time job, because if you're looking at 5-minute charts, you ain't doing your job. You ain't going to be the best. Say you're a product manager for an internet company like I was. You ain't going to be doing your best job if you're looking at charts. Now, I traded while I was working, full disclosure. My bosses knew I was trading. I didn't have a lot of work to do. I was probably one of the best product managers they had, but it was what it was. Let's talk about social requests. Nick from Spotfiy. Love the podcast. Looking forward to listening every morning. Keep up the great work. What should investors do with Google? Having a court date coming up for a monopoly, should we trim or hold through it? I would argue that Google is one that you want to hold, but I will tell you, you have weakness in it. And I think 150 probably provides you some support in this one. I don't know 100%, but if you look at a weekly chart on this one, why is 150? It's because that's the 2021 highs. And you can see it right here where in 2024, January 20, where it pulled back. That was old resistance, turns into new support. So I don't know that you necessarily need to, trim this one. The PE is not crazy compared to the rest of the Mag 7. It's not nuts. From a standpoint of Wall Street, their average price target is 201. Now, if the antitrust worries you, I will tell you, I think the company is worth more separated than it is together. And I think they become more powerful separated than together. So what'll happen is when they break up, you get a stock in each one of those companies. So it's not like the DOJ just breaks them up and says, okay, Google, you're going to own this stock, but you're not going to own this stock. No, they break it up, and then you get stock equal to the market cap of that particular business. And I think GE is a good example when they broke up, not because of DOJ, but they broke into 3 companies. You got that stock. All 3 have been performing well. So I'm not looking to trim this one. And the reason I'm not necessarily looking to trim this one, the PE is not crazy at 22. Remember, the average PE, I think it's 17 or 19. I think, prior to the last 15 years, it was like 17, but most recently it's about 19. And at 22 and with forward at 20, I'm not thinking that that's amazingly high. Now, the PEG ratio is 1.19, and the growth is the issue. When you look at the growth, they're growing 13% revenue, but it's levered free cash flow, and that's down 30% year over year. And that's the issue. They're spending so much money. It's the CapEx. It's the NVIDIA chips. It is, Waymo. It is that type of spending that hasn't really been brought in at Google. They're just used to basically making money and then spending money to make more money. The problem is if they get search taken out of them and OpenAI is good enough to actually take search revenue out of the mouths of the Googlers, then you're going to have problems. I'm not necessarily looking to trim it here because I do think that it's got too much weakness for me to trim. Because I think, my outlook is longer term, and I do think we get to that $200 per share at some point, but you just had the death cross. You got this gap up here between 177 and 182. We fill that at some point in time, but when you're at 32 on the RSI and your MACD is below the oscillator in a company like this, I don't think it makes sense to get rid of it unless you need the cash. And again, the question would be, when are you getting back in? For instance, we talked about Meta last week, okay? Meta last week, the algorithm said, hey, get out here with a 10% gain at 526. You saw it top out here twice at about 540, okay? If I just put a line over this and we say, okay, at 540, look at how that line once in July, twice in August, double top. And then you go to a weekly and we look at 540. Well, it's clear at 540. We're going to put 540 in here on the weekly. Look at how well back in March of 2024, back in June, and look at how well it bounces off that. Your MACD has reset. Your RSI is still at 59. Does it have room to go down? Absolutely. I said buy this under 500. I thought it would get back to 500. So Alphabet's kind of the same thing. I think they print money, but I think you'll be able to buy it a little lower. If you want to get out, just make sure you have a plan when to get back in, because that plan better be there, because Google is one of those that will pop 10, 15% in a day. And all of a sudden you're sitting there, Nick, going, why did I sell this? Why did I sell it? So that's kind of my thought on it. John Newell, looking for opportunities from fluctuations today and saw DYN, new but buy the dip. DYN, I don't know what DYN is. Dyne Therapeutics. This is like asking McDonald's what they think about the Whopper. John, I'm not a biopharma guy. Dyne Therapeutics, I have no idea. Wall Street says it's a strong buy. The quant says it's a hold. Nobody from Seeking Alpha. This has a $3.21 billion market cap. Listen. Waffle House probably makes more revenue than that. The market cap isn't big enough for me. Is it a buy and hold? I don't know. I don't know anything. What's their pipeline of drugs? What's the big kind of attraction to this? And that's the problem with biopharma. I just don't understand it. So DYN from a 4-hour standpoint, let's look at DYN. You're seeing it bounce and then just bottom out. If I look at this from a weekly, it looks like it just pulled back to the 50-day. But biopharmas have a way of doing that. They absolutely do. They have a way of doing that and pulling back to the 200-day. I would say if you're looking at this one, wait for it to go under its 200-day at $16, because your MACD still way too high. Your RSI just coming off of 74, it's down to 45, but that's not like, in 20 territory. So right now you're looking at this candle, a 12% up candle this week. 12%. The open at 27. The low was 23. Your current is at 31. So maybe you missed the buying opportunity. But I would trade it on a very short time frame. I just don't trust biopharma. Again, that's like asking McDonald's what they think about the Whopper. Walking into a Dairy Queen and saying, hey, do you guys have cake? Is this a bakery? So I'd argue that asking me, probably not the right one to ask me buy the dip on a biopharma. Ryan, from Spotify. Hey, love the podcast. Listen to it daily. Just wondering what your thoughts on Micron are. It's been going up and down like the other chip stocks, but what do you think of it going forward? Ironically, I saw a guy on CNBC this morning. I was telling my girlfriend. The guy came on and he said, I like Micron. Yeah, we've seen it pull back in chips. I like Micron. Never gave one reason why he liked Micron. I will tell you, Micron has some issues, and it's on the profitability side. It's been run up just like the other chip stocks. You can see the algorithm has you out. Nice 5% gain. You make 65% in the algorithm versus 47% buy and hold. So I would argue that maybe you want to listen on this one to the algorithm. When we look at the RSI, it's completely oversold. It's at 29. The last time you were here, it got you a buy-in right here at 91. You could have ridden this all the way up to 110. That's a great move. And that was back, a couple of weeks ago during that that Japan trade. If we go to Seeking Alpha and we look up Micron, let's see, it's a strong buy in the quant. It's a strong buy on Wall Street. Wall Street has a $159 price target. You can see they chased this up. They completely chased it up. It probably will come down. And I would argue that the valuation is pretty high, and it's the profitability. I shouldn't have said that. It's the profitability. They're 11% margin, but when you look at their growth, their levered free cash flow, they're not making any year over year. They're not making money. The revenue growth, 17%. That's fantastic. But they have too much cost. And so that's what you're seeing taken out of the business, is they just have too much cost. But the quant says it's a strong buy. Wall Street says it's a strong buy. It's number 2 out of 65. Taiwan Semi is the number 1. So again, it's different businesses, but you've seen a pullback in both. Taiwan Semi's up 1% today. I don't know. Let's see the futures. Dow Jones is up 0.11. We've come back a little bit, not much, but we've come back a little bit. So, but Ryan, I would kind of look at that one a little bit as, hey, I'm not an expert on this one. Chips are cyclical, and what you have to know about chips is it's very up and down. So you're going to see these sell-offs at time based on just the usage. Micron, from what I understand, has a good path forward. I don't know any better than that. I think, for me, when I don't know a company well, like I know Apple, like I know Google, like I know Facebook, like I know Tesla, when I don't know a company well like that, I'll try using the technicals. Now, from a fundamental standpoint, it looks like everything's fine because Seeking Alpha has it as a strong buy. You just got to know you're paying up on that price. So I don't think it's a horrible one, but I think going forward, I think chips do perfectly fine. You just got to kind of, ride out some storms like this where you're up 10, 20% and then down 10 or 20%. In NVIDIA terms, you're up 400%, but then you're down 20%. That's what you have to live with. But again, I think we continue to see some further downside. And right now, I don't think you'd time it and say, oh my God, we're that far under. Look at the daily. The daily, you're about to go through a death cross right there. If that 50-day continues to move down, you're going to have a death cross. And whether people know it or not, and I didn't believe this, but the market does act in a very systemic and mathematical way. So these charts aren't just like witchcraft. It's kind of like, hey, you want to look at the times when it's weak, but when you believe in the company, you can get back in. Yeah, we're seeing a bounce up here. I'm seeing a lot of green on my screen right now as we open. Buyers have shown up. It's a buy the dip. Do you want to buy? I don't think so, but I was wrong about the last time. The last time we were down 3% on that Japan carry trade. The rest of the week was super positive. So is this a buy the dip? Maybe, but I'm still staying patient. I'd rather buy at higher highs than be wrong and see another 8 to 10% downturn because I'm just dealing with a portion of my portfolio. I'm not dealing with the whole portfolio. Now let's talk about scans. What are scans? They are stocks that show bullish tendency in the 4-hour algorithm. Okay, it's nothing more. Pepsi, 177. Pepsi gets a buy-in at 177. You're at 179. It's up 1.1%. We talked about how this one was on a downslide, coming down to that 200-day, got to that 200-day, used it as support, bounced right back up. Every time this one on the weekly comes down to the 200-day, if you want to buy Pepsi, you can buy Pepsi. It's a good company with good products, with good management. Again, they show it all the time. Amazon. We can talk about Amazon. Here down 1.3%. It got a buy-in here at 177. You're at 174. Do you want to buy? You're on the downside of the 9-day. It's pointing a little bit down. Your 50-day, you just had your death cross. I would say your cap right here is probably 188 if it gets back up there. And then you've got Bezos selling at 200. If you're going to buy this one, it's going to be a long-term buy and hold. That's just my take on it. I think you're looking to add to your position. I don't think you're looking to sell this position in the next 6 to 8 weeks. GCT, which is Gig Cloud Technologies. This is a small cap. I got out at 22. We're trading at $20.32. Got a buy-in here at 21.13. You make 169% on average. 16%. You only win 36% of the time. And one of those times in the last 2 years is this run from $9 all the way up to $34. Okay, that's a 204% gain. So include that in the calculation. But again, it makes you 169%. If you bought and held, you lost 16%. I would argue the reason I got out of this is I continue to see the downside here. I said it before. I think that $18 provided you some support. What was that? That was the last time we pumped up to this price. Now, do I think we get back up to here? I don't know. They're buying their stock back. I went over it yesterday. I'm out of this one. It is an alpha pick. They still believe in this. There's some short reports out there. It's kind of an interesting one. Now, any reaction that's an overreaction, Dexcom. We've got a huge gap sitting up here. A huge gap. That is up 106%. Now I'm going to take this one out, remove this segment. There we go. You got a huge gap that hasn't been filled. And the last time the algorithm got you in, it started up there. You lost confirmation. It got you out with a 5% loss. 73.13 is the buy-in. I would argue that the business has changed. They blamed salespeople on their miss last time. But that gap at some time with this company probably gets filled. Now, the other one that I want to point out is Deere. And the reason I want to point out Deere is because we just crossed the 200-day. The original buy-in was at 349. The reason it's in the scans today is because it got another entry. So without getting out, it triggers me that, hey, this one got another entry, should go for a bullish run. It's up 1.46% today. The MACD, a little bit high. The RSI, super high at 70. You had your earnings. You have the 50-day starting to turn, the 200-day. If you get that golden cross, okay, if you get that golden cross, we could go back to all-time highs. I have said it before, and the reason this channel is in there is because I said this is the channel that it trades in. So when you're buying at 350, you can probably expect it to get up to 406. Now you're at 393 right now. Do you want to get up there? Let's look at Deere in the in Seeking Alpha. It's a hold as far as the quant. None of these things look good other than profitability. They have a huge, huge profit margin. Okay? Trailing 12 months levered free cash flow, 5.36%. The sector is at 6.5. When you look at Wall Street, there's 24 analysts that cover this. They have a $414 price target. Okay? That's 5% upside. I would argue if you're looking for a little bit of upside in a good company that probably won't pull back a ton, maybe to 360, maybe, that's about 10%, maybe 360. You could put some stop losses in there if you're afraid of it, but I do think that this company has some upside. So I'll put that in. Now there's some leveraged ETFs like TSLL, MagQ and this stuff, but I want to point out a couple of them that were absolutely clear that would go up, okay? First is XLU. Again, this one has another bullish entry in the algorithm where it got you in at 68 here. It's getting you in again at 77. You might say, oh my God, this one has run so much. Algorithm makes you 13% versus losing 0.4%. So let's go look at the weekly, because when we pulled back here, October of last year, and rates were signaling to potentially be going up, when rates go up, when rates go down, XLU will go up. And I said this before. The reason is because utilities will get bought because of their dividends, and XLU will rise. So, your top probably 78 on this one. They're not going to give you a price target on XLU here in Seeking Alpha, but they can tell you momentum's an A, expenses A, dividends A, risk is a D. The risk, let's see, percent of assets, top 10 holdings, 59%. Turnover, we can look at the holdings. It's NextEra Energy. So it's NEE is the top holding, big holding. You can look at NEE if you want. But again, I pointed out on the weekly, that chart. Let's look at NEE. Where are we on the weekly? You're still just at your 200 day. So you're not at your all-time highs at 90. If you put a nice little line across here and you look at what you want with any line is if you touch 3 or more lines, there's more validity to it. So you're probably top here is $89 on NEE. And if you look at NEE, it's a hold in the quant. If we look at Wall Street, their price target, 83. 83, but they haven't chased it up recently. It's been doing really well. Your growth, A, the revenue year over year, down 4%, probably going on a good one. You look at their levered free cash flow, not there. Profitability, you look at the profit, 61%. Return on capital, 3%. That's getting a ding. You look at their momentum, they're up 2% over 3 months, 44% over 6 months. So the other one that came up as far as the spider sector is XLRE. XLRE is real estate. And when we look at real estate, it's been in the crapper. And when we look at this weekly, you're just getting back up over the 200-day. Your 50 days started to move. You're on the top of the Bollinger Bands. So from a sector standpoint, I would argue that this one from a sector standpoint probably gets up here to 49, 50 at some point in time. Real estate has to come. Right now, your RSI is at 74. I think you trail off a little bit. If you wanted to trade it in this 4-hour algorithm, it makes you 31% versus losing 0.8% over the last 24 months. Your average win is 5% in the current run. I would argue in the current run, if you're more than 5%, you maybe want to take a look at, slowing it down. You're up 15%, 15.23. That's big in a sector. So, but you want to find sectors that are beaten down, go over here to market data, and we'll go to key market data, and you can just see the U.S. equity sectors, the 11 that make it up. And you can look at 1 month, you can look at year to date, and you can look at 1 year. If we sort this by 1 year, look at energy. Energy's been beaten up, but the reason energy's beaten up is because it's become so cheap, and it's an overabundance because China's weak. Now, consumer discretionary, second weakest, that's still up over 1 year, 8%. Okay, basic materials. You're never going to have basic materials just completely fly and lead the market. There's no way. What's leading? Financial services, because rates are going to be reduced. That's why it's been there. Communication services, utilities, technology. Technology is number 4 over 1 year. When you go to 3 years, energy is your number 1, 83%. That's because of COVID, the COVID lows. Okay, that was 2021. If you go 3 years back. So again, you want to take a look at these sectors. You want to do that stuff. If you have any questions, hit me up. I've been talking for an hour. I expected this one to be pretty short. But remember, Linktree has everything. Don't miss out on Trendspider sale. Seeking Alpha Premium, you get a free 7-day trial, $25 off. Alpha Picks, we just got the new one today. And if you want to trade I was on a draft last night. I was just thinking about trading stocks. Tonight, I've got a big league, 14 freaking members. It's going to start at 9 o'clock. It's going to end at 2 a.m. with us taking, the last kicker. It's crazy. I love it. But okay, take care. See you guys. Bye. Okay, let's see your comments. Brandon, you're helping Pepsi. I don't know if you've seen your stock, Brandon, but Pepsi's doing well. I think you bought the dip on the last earnings, if I wasn't mistaken. Down here at like 162, 160. Perry, Dollar General and Dollar Tree, it's a staircase down. if you don't shop at Dollar Tree or Dollar General, don't buy the stock. It's the bottom of the income ladder. Their growth has gotten too extensive, and their pay scale. I think it's the pay scale. I think it's the threatening of tariffs. They've all got it down. So I don't think, I think you can trade that one. AVGO is an interesting one because I think it's the multiple that's killing this one. And that's all it is. It's the multiple that's killing this one. You can see it using the 200-day right there as a support. The last time you had the opportunity to buy this on the 200-day was back here in April at 129. Good buy. I mean, you had several chances to actually get out. I bought in, I think, about 136, 140, somewhere in that neighborhood. So I'm still positive on this one. I identified it as a long-term buy and hold. You can see that the volume just has come down. So, I mean, ever since that split, it just hasn't done what I thought it would. Their earnings are coming out Thursday. Tomorrow, ironically, I still think today's Tuesday. I have it in the thing is Tuesday. When you go over here to Seeking Alpha, I like AVGO. I do. It's just the value. I'd rather buy AVGO than NVIDIA long term. And I say long term meaning 5 to 10 years. But just because I think the valuation, the market cap of NVIDIA is going to run ahead of themselves. Steph, I own this one. I like it, even though the valuation is crap. The growth is good. I got this one from Stephanie Link. I like her investing strategy. So, if I had thought about it, I would have started it, but there's no way. Brandon, I think if I put out a daily stock pick fantasy league, I should probably do it for paid members because I don't think we'd have that many paid members for fantasy. But I think there's a place where I can start a fantasy league for stocks too. And it's not time sensitive maybe I'll do that. Maybe I'll look that up. Because I know, maybe we'll have a Blossom, I think, allows me to start a trading group where we can buy and compete on Blossom. I mean, we could do it on Savvy Trader as well. I could start a thing on Savvy Trader that says, hey, get the free year of the newsletter if you win the next 3 months or the next month or something. I think I could do that. My buddy just sold his house. He's going to be homeless September 30th. He doesn't know where he's going to go live. Okay. I think I'm going to get out of here and edit this together. Let me see where my portfolio is, because I think I'm going to be down. I know that. It's just how much. Let's see. Everybody's logging into Fidelity. 0.73. Oof. That's Apple. It's got to be Apple. Let me see. Yeah, Apple's down 1.1%. Amazon's down 1.2%. Wow. Boeing's up 1.2%. Core portfolio. What was that? That's down 2%. PanW's down 2%. This is off of Zscaler earnings. Zscaler, for some reason, by the way, Palantir back under 30. Palantir algorithm got you out with an 11% gain. So you got weakness there. Simon Property Group, for some reason, is going up. I don't get this one. I mean, I love this stock. But the valuation on Simon Property Group is kind of nuts. PE 32. I mean, I guess the sector's 35. And it's not like, you know, they're growing a ton. I guess it's 70% payout ratio. Profitability. I mean, just the profitability is crazy. When we go to Wall Street, what's their average? 164. Again, I can't believe this is trading above what Wall Street says they would trade at. But the reason is people love the 5% dividend. And they're loading into a 5% dividend stock because this one just pays the dividend. This one pays, it just pays the dividend. It's a great stock to sit there. You know, it's in the core portfolio. So. Okay. Oh. Oof. Today hurts. My real estate agent just sent me 3 reasons we're not heading for a housing crash. Inventory of homes for sale still below norm. Builders aren't overbuilding, they're catching up. Foreclosure filings are still very low. I should forward this to Steve. Okay. Okay. What did he sell this for? I'm not going to mention it on air, but wow. Wow. I can't believe what he got for his house. I think it was 2018, 2019. He essentially, I think he put like 10% into the house's value, somewhere in that neighborhood. But he basically got 2.5 times what he paid for the house in Orlando. Crazy good move. And we're talking a lot of money, so it's a good, I'm happy for him. Okay, I'm out. It's 9:56. I'll see you guys tomorrow. Leaving you with this one.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning trading bell.